So we are basically talking about double entry bookkeeping system. What are we talking about? Double entry bookkeeping system. Come on, tell me. What is this? Business, right? To start a business, what we will need? One owner, right? Owner will bring money into the business, right? What is owner's money into the business called? It is called capital. That means when the owner is bringing money into the business, after this money comes into the business, what will we do? You will use it to buy assets. You will use it to do expenses, right? So whatever money is coming into the business, I'm repeating again, whatever money is coming into the business, that money you are going to use to buy your assets, and that money you are going to use to do your expenses. Are you with me? Is it necessary that the owner will only bring in his own money? He can also take money from outsiders. Yeah. The owner can also take the money from outsiders, and the money that the owner takes from outsiders is called the liability of the business, the money that is yet to be paid. Are you with me? Okay. In short, I'm trying to explain you that when we start a business, there are places from which the money comes into the business. Whenever we start a business, there are places from which the money comes into the business, and the places from where the money comes into the business is called sources of funds. What is it called? Sources of funds. The place from where you are arranging the funds into your business. Yeah. So sources of funds. So what are the places from where you can arrange funds into the business? No. Either you can get your own money or you can get money from outsiders. So what are the places from where you can arrange money into the business? You can have money from yourself or you can have money from outsiders. So what are the places from which you can arrange money into the business? Your own money or outsiders' money. Places from, repeating again so that it registers now only, places from where you can get money into the business, own money or outsiders' money. Can you repeat again? Money into the businesses, own money or outsiders' money. So places where you can get the money into the business is what? Own money, outside money. Own money is called capital. Outsiders money is called liability. Own money is also called equity, and they are called your sources of fund. Once you arrange the money into the business, the same money you can use to buy your assets, that is to use in the business, right? Or you can do expenses, the day-to-day expenses of the business. So you are receiving money from somewhere, and the same money you will be applying somewhere. You are receiving money from somewhere, and the same money you will be applying somewhere. So your sources of fund will always be equal to your application of funds. Are you with me? Your sources of Sources of funds, they always have what balance? Sources of funds, they always have a credit balance. Okay, and application of funds, they always have a debit balance. Now, when I am saying that the sources of funds always have a credit balance, application of funds will always have a debit balance. So, is it appropriate to say that whatever I have, I will spend the equivalent amount of money? Whatever I have, I will spend the same amount of money. I cannot spend more than what I have. I can get my own money, that is capital. I can get outsiders' money, that is liability. So, whatever I have, I can spend an equal amount of money in my business. Okay, I can never spend more than what I have. Okay, so can I say that the sources of fund will always be equal to your application of funds? Hmm? I will spend what I have. So what I have is called what? Sources of fund. What I spend is called what? Application of funds. So I can say sources of funds have a credit balance, application of funds have a debit balance. So in business, the credit will always be equal to debit. Credit will always be equal to debit. So this is how we frame the double entry bookkeeping system. What do we frame? The double entry bookkeeping system of accounting, which says that in accounting, your credit is always equal to your debit. Your sources of funds is always equal to your application of funds. This is the double entry system of accounting, or I will say this is the principle of duality. What is this principle? It is the principle of duality, which says every debit has an equivalent amount of credit. So, what does the principle of duality say? The principle of duality says that every debit has an equal amount of credit. Okay, so in accounts, your debit will always be equal to your credit. In accounts, your debit will always be equal to your credit. Why? Because sources of funds is equal to application of funds. So what are your sources of funds? What are your sources of funds? Capital plus liabilities. These are your sources of funds. What is your application of funds? Where? Assets. What is your application of funds? Assets. So capital plus liabilities is equal to, again, again, again. This is your accounting equation. What is this? Accounting equation. So what is the accounting equation? So your accounting equation tells you your capital plus liabilities is equal to assets. Your credit is equal to your debit. Are you with me? Now, when we have this accounting equation, there are few sums that I want you to practice. Okay, these are the first four sums. You can pause and practice. These are the next four sums that you can pause and do. I will do one thing with you all. Write the journal equation. What is journal equation? Journal equation means what? So what is the accounting equation? What is the accounting equation? Capital plus liabilities is equal to assets. Are you with me? Assets have what balance? Liabilities have what balance? Credit. Okay, fine. Now I have a question over here. They are telling me find the amount of capital. Capital is here. Capital plus liabilities is equal to assets. Can I say capital is equal to assets minus liabilities? Yeah. So what are the assets over here? What are the assets over here? Is building an asset? Asset? Is land an asset? Trade payables? Trade receivable? Closing stock? Stock means inventory. Assets. So capital will be equal to assets minus liabilities. So can I say 4,000 plus 10,000 for land plus, okay, liabilities is this, liabilities. So I will say minus 6,000 for trade payables plus 5,000 for trade receivables and plus 2,000 for closing stock. So what will be the amount of my capital? Please calculate. Where are your calculators? 4,000 plus 10,000 minus 6,000 plus 7,000. So my amount of capital is 15,000. With me? This is the sum. Second question, 15,000. Let's go over here. They've given you liabilities is 16,000. Capital is 5,000. So you know capital plus liabilities is equal to assets. So what is the amount of assets? How much? How much? 21,000. Capital. You know capital is what? Capital plus liabilities is equal to assets. So capital will be assets minus liabilities for the third sum. Land is assets. Outstanding expenses. Outstanding income. Assets. Trade payables. Trade receivable. So you will do assets minus liabilities. You will get capital. Are you with me? I'll go to the next one. Trade payables. Cash. Bank. Outstanding income. Machinery. So assets minus liability will give you capital. Yeah. Amount of liabilities. So you'll write capital plus liabilities is equal to assets. You want to find liabilities. So liability will be assets minus capital. And then you will get 15,000. This is 8,000. Okay. Minus 8,000. So your liabilities will be 15 minus 8. It will become 7,000. Okay. Can you tell me capital plus liabilities is equal to what? Assets. Now they want you to find assets. So I know capital plus liabilities is equal to assets. So what I will do, I will add the capital plus liabilities. This is not receivables, this is payables. Capital is this 70,000 plus 25,000. Outstanding salary is also liability plus 7,000 plus 3,000 will give me my assets. So this is the accounting equation or solving the sums related to accounting equation. It is because of this accounting equation we have the principle of duality. What does the principle of duality tell you? Principle of duality tells you that in accounting, every debit has a corresponding and equivalent credit. So what does the principle of duality tell you? Every debit has a corresponding and equivalent credit. It is called the principle of duality, or I would say it is the double entry system of bookkeeping. Okay.